So let me start right off, Rajan. So you have, based on what Let's Venture counted, and I asked a couple of people on Twitter, over 80 investments, right, in the last 7 or 8 years, maybe more. But that's kind of what the public record shows. So can you walk us through a little bit about just the overall portfolio, how it came into being, what got you started into angel investing in India?
Yeah, first of all, great to be here. You can hear, right, in the back? Okay. And thanks, Amit, for doing this. Look, I actually, I guess I started angel investing, very long time ago. So I went to MIT undergrad, and then a bunch of my friends became entrepreneurs. I had a job. They were founders. They needed money. So I, gave them money. I wasn't angel investing. These are really close friends of mine. And then I went to Stanford. Then most of my friends became entrepreneurs. So I had a job, they didn't have a job. Yeah, so that's sort of how I started in, I wasn't investing. I was really, at the time I had no idea what I was doing. I mean, these are like very close friends of mine. So anyway, that's how it all started. And then I did a bit of investing, not a lot in the US in the 90s, right? Through the boom, the dot-com boom. And then I'd say, India, when I moved to India in 2005 from the US. 2006, I thought I should get a little more structured about this. Like I've always had a fascination for startups and, so on. So I joined IAN in 2006, made my first investment in India. So first thing is, I've been doing this for a really long time, right? From early 1990s. And I've seen many cycles, like 1990s, 2000, March 2000, all that. So then I joined IAN. So my first investment in a company called VizIQ, which was an online learning platform, which became a SaaS company. We sold it to EduComp. We bought it back. We spun out another company. I'm still invested in VizIQ. I think it's been really fascinating. I've had several exits of the same company. So I did that. And then for the first few years in IAN, there really wasn't much to invest in. We'd go to these meetings once a month and there were a few entrepreneurs that pitched and so on and so forth. So long story short is, I did that. And then, I think towards maybe 2008 or 9, 2008 I moved to Bangalore. So started investing in Bangalore companies. And then, I think starting about 2010 or 11, I was at Microsoft for 2 years. That period, I actually didn't have any time to do anything. I was in meetings, like the whole 2 years, I just spent time in meetings. And so that's why I missed Flipkart, damn shame. But anyway, because, when you're in meetings all the time, you have no time to do anything, right? And
So rule number 1, don't be in meetings.
If you're coming to conferences and meetings, you're going to miss all the good deals. So, of course, you should go to Let's Venture and make sure you spend all your time on Let's Venture.
And stay for this session.
Time spent on Let's Venture is, directly correlated to investing in angel deals. So then there's 2 years where, I really actually can't remember. I think I did like a handful, maybe 2 or 3 deals, right? So when I left Microsoft, I just went nuts because I just oh my God, what am I doing for 2 years, right? So that's when I really started. Then I sort of developed more of an open architecture ecosystem, meaning I co-invest with lots of people. I co-invest with you guys at Prime, with a bunch of VCs, Karthik at Seed Fund, Sasha at K Capital, et cetera, right? And so that's sort of how it's evolved, right? And my strategy, I'd say for the last probably, definitely 8-9 years, has been, to invest in 8 to 10 companies a year. They all are very, very early stage companies. I never invest by myself because I have no time. So I'm always co-investing with people that I know well, and I'm always co-investing with investors who actually have time, right? Because if you have a lot of investors and nobody has time, that's a problem, right? But if you actually co-invest with others who have time, that makes sense. And then, over the years, I've just built, a system that works for me, right? So for instance, having a portfolio works for me because I just have learned that it doesn't matter how good you are, how good you think the founders are, how hot the space is, et cetera, et cetera, et cetera. Only 1 out of 10 really kind of plays out. And this is over, this is over, what, over 25 years now? So the portfolio kind of works for me, right? And then I look for a certain set of things. I only do tech. Occasionally I do like a non-tech company because I'm trying to learn about a space. And then within tech, there are a certain set of things I look for.
Awesome. So I have like lots and lots of questions. I'm sure the audience will have questions as well. So how, when you think about how entrepreneurs find you and what actually leads to a conversion to get a check from Rajan, whether it's with a co-investor or just sourcing, right? Or inbound. I'm sure you get like lots and lots of inbound, maybe as much as some of the early stage VC funds. How has that evolved, and how do you go through that, right? Because the top of the funnel will be very large to get to 80 investments, right? Or whatever the actual number is. So how is deal flow involved? How is sourcing involved? Is it only through referrals? Is it through serendipity? Is it through meeting people at the Let's Venture conference?
Yeah, I think, I think it's evolved a lot because, I think every year I have less time. So, because of all, various things that I'm doing. So today I'd say, referrals really is what it is, right? So, I get like 50 LinkedIn like invites a day from founders that want to, I'm not even active on LinkedIn anymore. I mean, I have a LinkedIn account. Don't tell the LinkedIn guys, by the way. Because I have no time. I mean, how do I check like 50 LinkedIn invites, right? I get all these emails from I don't have time, right? I mean, I have auto reply, right? So I don't even see them. They like go, the machine's filtering all these emails. So it's referrals, right? It's referrals from, now because I have a decent sized portfolio, I think the smart entrepreneurs are able to find other entrepreneurs who can, somebody in my portfolio who, they can talk to, and then, they'd kind of refer me. So that is primarily, it's either portfolio companies, other VCs, other angel investors. Actually, the last, it's very interesting. I mean, this year, I think I've probably done 10 investments. I don't really know how many I've done, but like, I think it's probably about 10. But, 5 or 6 of them have come from Let's Venture. So that's the thing, right? What I also try to do is, I'm trying to figure out at any given point in time, where am I likely to find sort of the kind of interesting deals, right? So I'm still very active with IAN. I kind of co-invest with a lot of others. But the referral or finding some sort of validation, right? Simply because I don't have time to sit there and read all these business plans. So being referred is what's important. But that being said, occasionally, like one of the most exciting startups I've invested in this year, I have to tell you this story. It's not public yet. I'm not going to tell you the name, but it's a Bangalore-based startup, right? So I was visiting the IMI. I'm the chairman of the Internet and Mobile Association. I was visiting. We have a little incubator space in Bangalore, and I was visiting there just to check out the space. And then I went to the NASCOM, incubator space, and one of the team members who's there said, "You must meet my husband," right? So next thing I know, I'm meeting her husband, who's an entrepreneur, who's building a SaaS company. Next thing I know, this guy is coming with me to the Leela. Next thing I know, I'm spending an hour and a half at the Leela bar with him. Next thing I know, I'm an investor, right? So that is sort of serendipity, right? And I think, so I think the smart investors, right? The smart founders, or they kind of know how to, like if the same founder had done that in an idea that I wasn't interested in, I wouldn't have taken him to the Leela bar, right? I would have said, "Thank you very much, gotta go." But he had an interesting idea, so that's a serendipity kind of thing. But it's very important to me to be referred because I just don't have like the time.
Great. So let's jump gears into the founder meeting you process. Let's say I'm an entrepreneur, I'm pitching you. At least what I've heard, sort of urban myth or otherwise, which you'll clarify, is you make a decision in about 20 minutes, right? So Leela bar thing is an exceptional thing, I'm guessing. I don't know if it's true or not. Maybe the meeting is an hour, but by the 20th minute in, you're sort of like decided. So how does the process go? How much of this is, gut versus weightage to the referral versus you already had a prior sort of, thread that was in your mind and you said, "Oh, this is exactly what I was looking for."
Yeah, look, I think that's probably a myth, by the way, right? See, the thing is, at any given point in time, there are a whole set of sectors that I have zero interest in, right? So this is what people don't realize, and that's why that's why I get all this like inbound like stuff, right, which is not really interesting. And there are a few themes that I'm very interested in, and then there's also like exotic things, like that I'm curious about. So I think, if I'm meeting, first of all, if I'm meeting, with the exception of this, that's an anomaly, right? If I'm actually got around to meeting somebody, a founding team or a set of founders, it generally means, they've gone through a few set of screens. I've actually thought about the idea, right? So I will not meet a founder unless I'm interested in an idea, right? So actually, in fact, one of the founders here who's building a very interesting business just came and talked to me, right? In 2 minutes, interesting idea, but not something I would invest in. So I'm not going to spend, so number one, I kind of know what's interesting at any, and by the way, what interests me changes, right? And I can give you some examples. And what interests me at any given point in time is quite specific. And I will meet somebody only if the idea is interesting and the person has been referred. And what a lot of people don't realize, before I've met, I've actually done a few ref checks. Because, I kind of know a lot of people, right? So if you worked at company XYZ, I'll send out one email to 3 people. All of a sudden, they're like, no, don't meet this guy. Or don't meet this gal. I'm not going to meet the person, right? But then once I meet the person, look, within, 30 minutes to 60 minutes, right? I'm trying to get a sense of, look, is this, let's say a founding team? I'm trying to get a sense of, is this a team that can really run the distance, go 10, 15 years? Do they have energy? Do they have chemistry? Are they interesting? Because, the reality is I'm going to have to, talk to them probably for a decade, right?
Yes.
Before I exit. So I don't have to talk to them very often, thank God. But, so I'm trying to get a sense of that, right? And because I tend to invest in things I understand pretty deeply, in half an hour, I can ask the 5 questions that matter, right? So if you're building a consumer internet business and I'm going to ask you about unit economics, customer engagement, retention rates, et cetera, by the 7th question, if you're still with me, it means at least you know your business, right? And which is why I don't invest in things I don't understand, because I have no idea what questions to ask, right? Like I'm really fascinated by consumer products, right? Because I think it's a great time to be building food brands and apparel brands and all these kinds of brands. But what questions do I ask? I have no idea, right? So I don't invest in those.
Sure. So what are a couple of sectors that you're super excited about? Couple of sectors that you're like, this is just not for me, and couple of sectors that you're very curious about, like intellectually curious. So just to dabble and learn about the sector, you will make investments.
Yeah. So I'll tell you. When I think about angel investments, right, I have 3 buckets of investments, right? The first is companies that I think are going to be very valuable, where I might make some money, and I use the word might. Because, this is not an asset class, right? If you really want to make a lot of money, I mean, like, lots of other ways to make a lot of money, right? So that's the first segment, right? And that's where most of my investments will go. The second is really where I'm trying to learn, right? So I invested in MakeMyGenome because I didn't know anything about genome sequencing. I didn't know much about life sciences, so Anu was very impressive. So I invested because that was the first life sciences company that I did, right? And then after I did it, I realized I really don't know anything about it. And you can't just do one company and figure anything out. So I said, you know what, maybe I shouldn't do this anymore because I don't have the time to. So, but that, that's sort of, I'm trying to learn, right? And the third one is, the third type of investment I'll make is because I just generally think it's a good thing to do. So you could call that like social investing, right? But I actually do a fair bit of that. And I'll give you examples in each of these buckets, right? So in the first bucket, right now, look, if we look at actually my entire, almost all the exits I've had, which have, more than returned the capital I've invested over 25 years, have really been B2B companies, right? So I'm a big fan of B2B companies because, they tend to be very focused. They tend to be solving a real problem. It's very difficult to give it away and lose money. Right? If you have a team of 25 engineers, I mean, like, what are you going to do? Like, pay the person to make using the software? You could give it away for free. It's called freemium, but like, hard to imagine how you lose $1 million a day. Like consumer internet, if you want to really scale, you lose $1 million a day or $5 million a day.
Often to Google and Facebook?
No, not really. I mean, it's actually product discounts, right? So so I do a lot of B2B, right? So if you're building, let's say, a vertical focused solution, right, that really solves a real pain point, then that's sort of interesting, right? So for instance, I invested in a company about 3-4 years ago called IntelloCut. IntelloCut essentially improves the textile, fabric manufacturing process by reducing errors, right? I mean, everybody's like, why on earth are you doing this? Because, textile manufacturing is a $1 trillion industry and it doesn't have a lot of technology, right? So, believe it or not, these companies got like $3-4 million of revenue and they've raised only a couple of $100,000, right? I mean, that's pretty cool because they're going to be, $20 million revenue company and maybe they would have raised like $2 million, right? So on a return on capital basis, this thing is going to do exceptionally well. So that's sort of an example, right? So I'm always looking out for interesting B2B companies that are solving real problems that I think, this team I invested in Bangalore, right? It's a B2B solution, but doing something slightly differently. So that's sort of one. And then on the consumer side, look, it varies, right? So I'll tell you some themes I've invested in that I don't invest in anymore. By the way, this is not to say that you shouldn't, right? It's just like things I don't. Like, for instance, I was a very early investor in content. So all the leading online content companies in India, I'm the first investor. Okay, so Miss Malini, Popexo, Little Black Book, et cetera, right? But then, and then most recently I did My Upchar. But by and large, I've slowed that down simply because, it's going to take a long time to monetize, right? So no point having 20 of these because, it's just the first 5 are going to take 5-10 years to monetize. So what I try to do is I'll try to get in early. I'll try to build positions or, invest in some of the early companies that I think are really going to be successful. But today, I mean, some of them, like now, actually, I'm going to exit a couple of them, right? Which are pretty decent exits. They're still not huge companies, but, I'll make decent exits. Another space is education. So I was very early in online education, and it became clear to me about a year ago that, getting a large number of users with online education is not that hard. Because, when you have 400 million internet users, 300 million on smartphones, you can actually do that, right? So I have, maybe 6 or 7 really interesting education companies. They have large user bases and very little revenue. So what do? I say, okay, let's wait. So I moved on. So with consumer, so now with consumer internet, right? I'm looking at, companies that are basically not just internet. It's like internet-enabled offline businesses, right? So for instance, CrowFarm, right? CrowFarm is in ag. They basically focus on farm to the retailer, right? They're basically a couple of distribution centers in Delhi. They're about 20% wastage in the ag value chain, so they do that. So that's the first, right? The second, so that's the first category, right? So primarily B2B, B2C, but it's very thematic. Themes change. I'm trying to figure out what's the right team. The second is learning. So I'm very excited about basically transport. So my latest investment I'm super excited about is called Zunum. Zunum is building the world's first hybrid aircraft, right? So I don't know how many of you really like planes. So 2022, we're going to ship the world's first hybrid airline. For $2 million, you'll be able to buy your own plane. You'll be able to go from Bombay to Delhi or from Delhi to Chennai. Okay, so it's a Seattle-based company. And by the way, I also do invest in the Valley and Seattle and so on and so forth. So that's, but to me, that's about learning, and it's really cool, right? If it works, it's going to be huge. There's a high likelihood it doesn't work. But it helps me that Boeing and Airbus, Boeing and JetBlue were co-investors with me in the seed round. So that kind of helps, right? I mean, like,
of course.
So I did that. I did a company that's in the satellite space, very interested about satellites. So it's like satellite analytics company. So those are all kind of learning, right? As some of them could work. And the third one really is, just good for India. And I'll do some of those because I don't think these are going to, I'm not expecting them to return capital or give me kind of outsized returns. But I think they're just generally very good things to do. And my view, Amit, is that if you are building useful things, right, at some point they become very interesting, right? But it may not be in the next 5 or 10 years.
So if you evaluate the success ratio, right, either of exits or even kind of the quote-unquote mark-to-market of companies that have done well. I know you're in Dhruva, you're in Capillary, you're in a bunch of other big companies. What, if you look back, 2020 hindsight, what made it special? Like, was it the founders, the right timing, the right market, just, sheer luck? And what is the distribution like? Is there a power law there? Is it uniform?
No, there is, right? Look, I mean, the thing is, most exits will be 3 to 5x, right? But those exits really don't make you much money because, as an angel, you're putting in small amounts of capital to work. So, what you're really looking for is the 50x or 100x, right? And I think the 50x to 100x is, very rare, right? I mean, I don't think it's even 1 out of 10. It's probably 1 out of 20 or 1 out of 30. And you're going to have a few of those, right? So the only reason I can keep doing what I'm doing is I have some of those. And quite frankly, look, the honest truth is you never know. You never know, because look, at the end of the day, you're investing in founding teams that you think are interesting, that are capable. You're investing in an idea that you think is big. But then, everything changes, right? The market changes, sometimes the teams change. So look, I think I've stopped trying to predict, what's the 1 out of 10 that's going to be a home run. But what I do, Amit, is I have a system, right? A lot of angel investors, they lose a lot of sleep about companies that don't work. When a founder writes to me and says, Rajan, it's time to give up. I'm really sorry. And then they write about 18 paragraphs of what all went wrong. I'm really sorry. And this is after they've gone quiet for like a whole year, right? I mean, like they've gone, because, by the way, with their founders in the room, like when things are not going well, over-communicate. It's a good thing. They write this whole thing, right? I'm like, fantastic. I don't have to worry about this one now. Boom, that check, move on, right? So what I do is I spend very little time. I try to help them out, right? Saying, what can I do to help? You know, like the only thing I'd like, if you're a founder in a startup that I've invested that didn't work, please buy my shares back for ₹1, because otherwise if you're in India, you can't even take a write-off. Right? So just buy my shares off ₹1. You can pay 50 cents if you want. It doesn't matter, right? Let's just move on. So I tend to, I actually have zero worries, right? I mean, I see a lot of angel investors, you're cutting, losing your hair, you're calling the founders' names, you're trying to find all the things that are better. Who cares, man? Most startups are going to fail, right? So my system is invest in things I deeply understand. I'm always on call. I have no time to have reviews and all this stuff. So if the founder needs to call me, some of them call me all the time, others don't call me at all, doesn't matter. Be supportive. And then when, for instance, I can help when Series A, right? Because I know a lot of VCs, et cetera. I can help them sometimes connect with the right strategic partners, with talent and so on and so forth. But then when it doesn't work, just move on. And so what I'm trying to do is this year, let's say I'll do 8 to 10 investments, right? 3 years from now, so whatever, in 17, 18, 19. So somewhere between now and 2020, 1 or 2 companies will emerge from this class. The 2018
17,
Rajan
18.
Anandan batch,
yeah.
Right? That really become the interesting companies. And those are the ones, and the sooner I can get to those 1 or 2,
yeah,
the more efficient I become, right? And the more fun it becomes, because those are the ones, right? So Capillary, when did I invest in Capillary? I think it was 2011 or 2012, right? I was early investing in Capillary. I mean, look, Anish and the team, they were as impressive as the other teams I invested in that year, right? And if you had asked me, look, here's a company that's building CRM solutions for retailers. I mean, are they going to be $20, $30 million revenue, worth several $100 million 6 years later? Who knows, right? I just really liked the team. But then what happened was 2, 3 years later, they broke out. They started getting 5,000, 10,000 stores, et cetera, et cetera. And now I'm on the board, because now we can go from, 20, 30 million to 200 million revenue, right? And so to me, it's really about that whole selection process. And my system is, I don't try to overanalyze and figure out, I have no idea. If you ask me, I invested in 10 companies. Every single one of them, I'm hoping will be a hit. But I also know that only 1 or 2 out of this batch will really be winners 3 years. And it's 3 years, right? It's not next year. So, I find it really curious, right? Angel investors, they're like, where's my monthly report? Where's my quarterly report? Doesn't matter. There's nothing you can do, right? I mean, seriously, unless you're some genius, which I'm not a genius, don't worry about it. Because see, my role is to get that company to you, because you're a professional investor, you know what you guys are doing, and then you can work with them, right? So that's what I'm trying to do, is really help figure out which ones are going to win, and then support them to get to the next level, right? I think the single biggest thing I've learned is, zero worry about failures. Because I think, once you start agonizing about failure, see, if you're in something where most things fail, and if you agonize about failure,
you're finished.
You're toast. You're just going to be an unhappy angel investor.
That's right.
Unhappy angel investor is a bad idea, right? Be a happy, energized, optimistic angel investor.
Hence the name angel, as opposed to devil. So how about, let's switch gears a little bit. Talk about you have a pretty interesting data set, right? 80 companies, maybe 150 odd founders, co-founders, maybe more. So what are some of the characteristics, right, that kind of uniquely stand out, right? I mean, there's the usual stuff you always hear, right? Grit, persistence, do you know your stuff, whatever. But are there things that have surprised you, right? Either in terms of founder characteristics or in terms of investments that you wouldn't have expected then, and you said, wow, this is I would have no idea, right? One is, of course, about the business, like Capillary and retail POS software. But other things that have surprised you about founder characteristics or companies?
No, I think the first big lesson is don't invest. Single founders, I think, is very difficult, right? Now, of course, in the world there are many successful ones like Michael Dell, Zuckerberg, etc. But I think I've found that single founder startups I actually don't invest in them anymore, because I think it's so difficult, and you go through 3 or 4 near-death moments, right? Where if you don't have another founder, it's very difficult to kind of see your way through it. I think other than that, look, it's the things that people talk about, right? I think persistence and ability to just stay in it when all the chips are down, I think that is the single biggest criteria, right? Because all kinds of bad things happen, right? Markets turn, competitors put more money, your co-founder leaves, you have personal issues, your business is terrible, your VC is trying to screw you. It's really bad, And so persistence and just being able to stick with it, I think that's the most important thing. Other thing is, because I invest in tech, right? I think it's very important for the founders to be, like I would never invest in a startup unless it's a content startup where I've done a few, where one of the co-founders is not technical and they're like seriously technical, right? So I think that's really, really important. And ideally, you know, it's when you have, let's say 2 co-founders or 3 co-founders, you've got, let's say if there's 2, one is very technical, builds the product, but the other one is very commercially savvy, right? Because he or she then can actually go and get the business, whatever that is, right? Consumer internet, it's about consumer marketing and so on and so forth. I think if it's only a pure tech company, I find that they take a really long time to scale. And if it's only business company, they sell more than they make. And that's hard. Because, you know, like I have one of these companies now, you know, it's like everybody in the world, by the way, thinks this is like the best security company in the world. They don't have a product. Right? Okay. But I'm not going to tell you who it is. Yes. So, you know, like that's like not great, right? Because that eventually catches up. So I think having those kinds of things, but I think it's not rocket science, right? I mean, I think I find that, you know, if you spend even like 30 minutes to an hour with the founding team, the other thing is like dynamics, right? Sometimes they fight, like literally in the meeting, like they're pitching to you and they can't agree with each other. That's a really bad sign. You know, I mean, like, oh my gosh, you're really going to work together for 15 years to build a company? I don't think so.
Awesome. I have lots and lots of. I said I've been wanting to do this this thing for a while. So feel free to raise your hand as we go along now. We have about 15 minutes left, and I'll take your question. But please be precise and come straight to what the question is. And so we'll start with the gentleman up here.
Rajan, one of the things which any founder expects from an angel investor is the mentoring and handholding. So how much time or are you mentoring some of them or handholding or helping them in whether in the customer acquisition or tweaking the business model, or you just invest and forget it?
Yeah, no, so you know, as I said, look, I'm on call, right? By the way, if the founder really needs my help, I shouldn't be investing in them. Because at the end of the day, they're going to make their companies, not angel investors. I mean, I have all my friends who are really good friends who are ace angel investors. The reality is, look, the startups made it because they were awesome. We got lucky, right? It's a privilege to be investing in awesome companies, right? That's always been my view. Look, I'm always on call, right? So my thing with the companies I invest in is call me anytime you need about anything that you need, right? And I will always call you back, and wherever I can help, I will help you. But I simply don't have the time to have monthly mentoring meetings or yearly mentoring, you know, like all that, right? So I have, you know, 3 groups of founders, right? There's a group of founders who, well, I'm on a few boards, right? So I sit on sort of the Capillary board, I'm on the WebEngage board and a few more boards. The Sensible board, which is, you know, a bunch of IIT PhDs. So they're obviously, you know, I'm more engaged than others. Then there's a group of founders who call me, like, there's actually like 5 of them that call me every week. And you know, the thing is, I stick to this, right? If you call me, I will talk to you. If you reach out to me, I will, because that's sort of one of my core principles, right? And then there's a whole bunch of them that don't really, you know, and actually, you know, it's very interesting. I was on a flight like 3 months ago. I invested in this company like 2 years ago. You know my whole thing, right? Like 3 years later, 1 or 2 will emerge. So I was sitting next to a VC, and he was telling me about this really interesting company in Bangalore, right? I was like, man, that sounds really familiar. You know, and he's like, you know, it's really awesome. You know, they're going to raise this big round. I'm like, oh my God, they're still alive. Right? So then I land, and I call this guy. He's like, hey, how are you? Oh, Rajan, I was going to send you an update. It's been 2 years, right? So, and you know, things are going great. It's awesome. I'm like, wow, that's awesome, right? See, my point. I mean, like, so look, my view is, you know, we should be, I mean, I have a very simple angel investment philosophy, right? It's a privilege to be a part of great companies. It's a privilege for me to invest in a startup. It's not the other way around, right? Secondly, I should ideally invest in founders who don't need any help from me, because the reality is I don't have much time, right? But then third, if they want help, I must be there. That's why, you know, when a founder says, you know, it's time to shut down, because see, that team, let's say it's 2 co-founders, right? They have spent 2 years or 4 years, in some case 6 years, just doing this, right? They haven't slept, they haven't made an income, and all these kids, right? They can, I mean, kids or whatever, founder, they can make so much more money working at any company. They have given their lives for 2 years or 4 years or 6 years to try to build this company. And when they finally give up, my role is not to question. My role is to be supportive. In fact, a lot of my founders, you know, where the startups haven't worked, I've helped them get jobs. If they tell me, look, they want a job, I will make sure that I will get them a job, right? So my approach is be helpful when help is needed, as opposed to, try to be very involved and so on and so forth. Right now, that being said, look, I mean, there are some startups that want to be mentored on, how to do B2B sales or how to think about digital marketing, and I will spend the time again, right? So if one of my founders asks me for help, I will absolutely help. So there are like 3 of them in Bangalore. I'm not tweet, like when I go to Bangalore, I don't tweet. Because if I tweet, finished. Like, like they will come, pick me up from the airport, like hour and a half, talk to them, right? It's amazing, right? So I have to be careful.
Your doors are open, always accessible that way.
Yeah. So I think that's really important, right? Because, and also that creates a market dynamic, right? So founders who think they can, where I can help, they'll ask me for help. Others, right? Like if Anu, who's mapped my genome, if she I don't know how to help her, right? Reality is, like, what do I know about genomics other than I've got really bad genes? By the way, you should do this. You're gonna map my genome, get your genome test done, because you'll figure out, like, what's gonna happen.
Other questions in the back? There was somebody who had raised a hand.
Hi. I have a burning question. Do you see a correlation between the communication that you get from founders and the success of the company? Is there any correlation at all that you've seen with your 80 companies?
Yeah. By the way, I don't know where this number 80 came from, but I don't comment on how many. No, the thing is.
Let's venture.
Let's venture. Okay. So
therefore, it has to be correct.
Shanti is not using big data yet. She's doing spreadsheet math. Anyway, just kidding. So look. Short answer is, look, I don't think so, right? I think what I can tell you is, when I haven't heard from a startup for a long time, generally means that things aren't going well, which is unfortunate, right? Because I actually think, especially in lean periods, bad periods, startups should over-communicate, right? Which is what we do. I mean, those of us that run businesses, right? Man, when I'm having a bad year, a bad quarter, I am over-communicating like crazy, because that's important, right? But I think, look, I think the bet, I should say, you can't, I don't think there's a direct correlation, but I do see that the founders who are successful long term, right? They're very good at leveraging people who can be helpful. Like, it's very interesting, right? Capillary, the first $1 million of revenue they got without having a single salesperson selling to the biggest retailers in India, right? And the reason they were able to do that is because all the investors knew all the retail CEOs. So they got a bunch of investors. They said, please call your friends. Set up a meeting. They had a compelling product. They show up. They like, okay, great, right? So they know how to use, and they use communication that way, right? Like, I have a founder, every 2 weeks, I get a list of to-do things. Like, can you imagine? Finally, I said, look, I can't do this.
I didn't know we could do that.
Don't tell it. By the way, please don't tweet this. Yeah, very dangerous.
It's only being live streamed. So
oh
it's
my
not
God, live stream, finished.
Yeah.
Toast. Anyway, so, yeah, like every 2 weeks, I get a list. Like, dude, I'm like, I don't work for you, But I find that very endearing, right? Because, and then I found out, this founder does it with all his investors. It's like, great, and no wonder it's growing like a rocket ship, because all of us every week are doing something for this company, which is amazing, right?
So let me build on that for a second while we wait for the next question. So have you figured out, hustling kind of as a skill set, right? So, who has done like the most creative hustling to kind of get to you, even to make the pitch? There's the classic, right? I mean, your co-investors, your other folks, people VC friends, whatever, like something that has just been crazy, like your Bangalore example.
No, I think the latest one is really Bangalore, right? I mean, that, because, that was a spouse, right? I mean, and by the way, he was babysitting. So they have a baby who's like, I think, a year or two old. So he was at home. Right, so we were in this, the NASCOM as a center right next to
I know the company.
Right, so I was in that incubator, and so she works in that space, and so as I was, and it's really interesting. As I was walking out, very charming, walks up, how are you? I need a minute. I'm like, okay, I'll give you a minute, and and then I didn't realize. So before that, she had called him, and said, call the mother. Mother had to come because babysitter, right? I mean, can you imagine? That's like really cool. And then he shows up. And that's, so I think, I think those are the kind of and I know this team is going to be successful, right? Because there's that hustle, right? That kind of energy to get stuff done.
Sure.
And so, and by the way, that is a characteristic of the success. They don't give up and they hustle a lot, right? And they, by the way, they work all the time. I mean, I feel bad, but my work-life balance is bad, so I guess I should feel bad for them. But anyway, they have no life. They have all work. And I think that's what it takes, right? You got 10, 15 years, you just got to go at it every single day, 12 hours a day. I used to, now I'm like too busy, but up until about 2 years ago, before I invested in a company, I would ping them on IM at midnight.
Interesting.
Yeah. Firstly, you have to get on Google Hangouts. yeah, that's
It's
important.
better than
drive
Google,
adoption of our products. Yes, of course. But then, it also tells me, right, if you're going to bed at midnight, which is before I go to bed, that's a problem. Right? Now, fortunately, startups, they work till 3 and then they get up at 10. But then what I started doing was, I'd ping them at midnight and then I'd ping them at 7 a.m.
That's
then you can kind of calibrate, right?
And
But
then,
again,
and then the meeting gets cancelled next day.
By the way, that's the other thing I do. So now, I still do this sometimes, right? I'll say, hey, can we meet at 6 a.m.? And if they're late by 10 minutes, no, it's not going to happen, right?
Yeah.
Because then, again, right, it's about that, do you have that instinct, right? That just show up, be on time, because this is an important meeting. If you're late by 20 minutes, forget it. I mean, you don't care, I don't care, right?
Another question?
Yeah.
Yeah.
Can I have
mic up front?
Yes.
If
Yeah.
somebody has a mic, I can.
Rajan, I observed
Go
that
for
you
it,
have
please.
quite an hands-on approach. You just invest when your friends refer you, and there is a co-investor, which is a easier, rather not so easy, but since you are so networked, I would like to know, typically in Indian context, how many co-investors are usually there in any one of your unique investment, and what is the amount normally you invest in one?
Yeah, so, look, the co-investors really depends on who I'm co-investing with, right? I mean, I really do have an open architecture model, right? Sometimes I'm just co-investing with Amit's firm, Prime Ventures, right? It's just Prime and me and maybe another angel, whoever, they decide, they're leading the deal. I'll invest. Sometimes I'm investing in IN. I still invest with IN. IN could be 10 investors, could be 20, 30, whatever the number is. A lot of times I'm actually investing on the Let's Venture platform. And then that could be, 5 investors or 10 investors. But the thing is, you have to keep in mind, I don't really care how many I want to make sure that there's somebody on that cap table that has got a lot more time than I do. But I actually am not influenced by who is investing in the deal, right? So I'll say no to a lot of deals that are referred by VCs, etc. Because again, right, it doesn't fit my themes. I can't relate to it. I don't think it's a big problem, or I'm just not interested, right? So I'm always making the decision by myself, but I want to co-invest primarily for leveraging expertise and time. And then in terms of amounts, look, it varies. I mean, it varies from 10, 20,000 all the way up to much larger numbers. 100, 200. It depends on the deal. Depends on the time of year. By the way, right? Like right now, I'm over. I set myself. Actually, my wife set an allocation for me. She said.
So there is an LP.
No, yeah, absolutely. No, she's like because the thing is, after a while, I mean, like, what's going on here, right? So I have like a 8 to 10. That's why I have this 8 to 10 number, right? So by December, I'm like way beyond my allocation. So even if I see like the next Google, I can't invest because so I have to wait till January.
You are saying around $100,000 is amount you're talking about.
No, so it's a range. That's what I said. Like it really is a range, right? So I have some investments that could be higher than that, some that are lower than that. But so my counsel, I don't know how many of you are new angels, right? Is look, my counsel to you is spend a few years learning and developing your model of angel investing, right? Because see, I have a model, it works for me, right? But today it works for me because number one, I've been doing it for a really long time. And as you said, I have a system, right, where I'm seeing, look, the most important thing as an angel investor is you want to see the best deals, right? Because if you're not seeing the best deals, doesn't matter how, and you develop a model that works for you, right? So I co-invest with, some of my closest friends who are co-investors. They have a very different strategy. They focus on fewer deals, they go very deep, they spend a lot of time, and they're extremely successful because that model works for them, right? But I think the first step, if you're a new angel investor, is it's like anything else, right? 10,000 hour rule applies. Is take a few years to really learn, and the best way to learn is Let's Venture, angel networks, co-investing with seed funds, being an LP in seed funds, etc. Because I find that a lot of people are enamored by this, right? But the reality is this is not a traditional asset class by any stretch of the imagination, right? I mean, I suppose Bitcoin is more speculative today, right? But this is not Bitcoin. But it ain't a bond, right? So I think taking the time to learn, because I would say, look, you should ask yourself 3 questions, right? 1, do you really know this stuff? inside out, right? Second, do you have a strategy, right? Third, is there a reason why startups should come to you? If the answer to those three things are not very clear, right, you really should figure out how to answer those three questions in a very, very credible way, because I really worry that too many people are trying to do this because they think they're going to make a lot of returns, or they think it's easy, or whatever it is, right? And I don't know if that's helpful, but
Very, very seasoned.
I think this
Thank you.
is. So I think I'm going to sort of bring this to a close, because that was phenomenal summary, Rajan, in terms of, know what your strategy is, come up with a strategy, have some sort of system or architecture, spend some time investing, kind of learning the ropes, and then also from a sourcing perspective, why should people come to you, right? What is it that you're bringing to the table?
I think it's very important, right?
Yeah.
Because if there's no reason for people to come to, this is the question about hands-on or value add or non-value add, right? At the end of the day, I don't really know why founders I have no idea, right? I think a lot of them think it's an easy check. Actually, they don't realize that just getting to me is hard, right? I mean, it's easy if I'm convinced. So I think, for me, I suppose it's because I will be helpful if you're there, right? And I'm always on the founder's side, generally, right? By the way, there are some founders where look, one thing that doesn't work with me is lack of integrity. I would say in the last 8-9 years, I've had 3 or 4 situations of just integrity, and then I'm done, big time done, right? So everything that I just said doesn't apply.
Of course.
When there are these integrity situations. But anyway, go ahead.
Yeah.
You were going to ask me last question.
Yeah. No, I think, I have lots of questions, but I think this is phenomenal, Rajan. Thank you so much for taking the time. I've been privileged to have this conversation, and I'm sure there'll be a lot more people that want to talk to you. So thanks, Rajan.
Great. Thanks, Amit. Thank you, everyone.